Disney's been doing great with theme parks, and I do expect a lot of discussion about what they're doing in their theme parks. They've already put out a model of the Star Wars land. I don't know that that's investable, but it certainly looks nice. We'll look for some more information about new attractions. Maybe we'll hear about when Toy Story Land is coming up in Orlando. Maybe we'll hear about the popular Tron ride in Hong Kong or in Shanghai, maybe coming to the U.S. Maybe we'll hear more about what's happening with some of the production on their movies. The Han Solo movie has been a source of a little bit of consternation with some director changes, but nothing really terrifically meaningful. But certainly it speaks to Disney's strong point, which is movies, theme parks, merchandise. Sure. Not ESPN, not the stuff that Wall Street's worried about, but all the other stuff that people are happy about.
So exactly in that point, Barton, I mean, what Wall Street is worried about is not only the subscriber declines at ESPN, but also the reported declines that Disney's seeing in their children's channel. How do you assess what is actually going on here for their TV and cable business?
Well, I think what is happening is that Disney is a TV network, and TV networks are suffering from secular change, which is that more of the consumer interest is going to internet video, and people find the TV network bundle a little less valuable than they did last year, and that seems to be a trend that's going to continue for as long as the eye can see. So I think that for Disney, what's going to be really important for the stock over the longer term is, can they come up with some type of over-the-top strategy, to navigate this change? Are they going to go direct with their big consumer brands, things like Marvel, Star Wars, the Disney kids brands? And what will happen with their direct over-the-top effort with ESPN? If they get some traction there, I think that'd go a long way to allaying the fears about Disney being tied to this sinking ship of the traditional TV bundle.
They made some pretty smart recent acquisitions that have really helped, for instance, the movie pipeline. Could they do the same in TV?
I don't expect them to be buying things in TV. I think that their acquisitions have been a big content that they've taken.
So what is the end in sight then, Bart? I mean, if this is a part of the industry of their business that's going through a secular change, they're not willing to make any big acquisitions to change the trajectory of that. What's their way out?
Well, when you say not any, they did buy into BAMTech, which is going to drive their over-the-top service, and that's really the way out on TV, I think, is to make that not just a small thing, but something that's big enough to matter. And that has to be pretty big, given how huge ESPN is as part of the bundle fee structure.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.